Good or bad, that sound is the same. Today's closing bell at the New York Stock Exchange.
That's right. Got the Rangers, New York Rangers up there clapping it all in. But the Dow Jones, as you see, closed the day, mostly in the red, but flat, down almost 80 points as the numbers settle. The S&P 500 and the NASDAQ also ended the day relatively flat.
Nancy Daoud joins us now. She is a private wealth advisor at Ameriprise Financial, the CEO of Opus, Advice First. Tell us, Nancy, the same question we love to ask our guests. What was driving the market today?
Well, it was actually quite flat most of the day, but kind of like most NBA games, all the activity came in the last 5 minutes. But it ended still somewhat flat. I think there was a lot of anticipation of the bank earnings, which really sort of was benign in the end. Nothing of major attraction there.
But Nancy, let's speak a little bit more about that then, because as earnings season, as this time of the year is known as, we did see those mixed first quarter results from the big banks, and that includes Morgan Stanley. So does that suggest the mixed outcome that the industry is still struggling from, the SVB collapse and the rush away from regional banks, or is there kind of more at play here?
No, I think it looks more like the banks are going to be just fine. The larger banks that have a good money supply are going to be just fine. It's the smaller banks that might have to regroup and revisit how they are holding their money supplies and their deposits. But I think it's clear that the SVB, the downfall of SVB and the smaller banks really taking the whole financial sector down was way overkill and an overreaction.
Nancy, let's also talk about layoffs, because Facebook parent company Meta began its latest round of mass layoffs today. Disney and Amazon also announced job cuts this week. How much do these job cuts at large corporations affect the overall labor market?
Well, ultimately, it will show up. I mean, it can't just disappear. I mean, we've been seeing this trend overall for the last few months. Inflation is at 6%. There's the consumer spending is showing very, very good signs of, or I should say bad signs of less spending, and that makes up 70% of our economy. So companies are going to have to start reacting to rate hikes and tighter lending and tighter credit. Companies have to start reacting to that, and perhaps the shrinking the labor supply and cost containment are going to be some of the measures that we'll see. But remember, job reports are a lagging indicator. So when these layoffs are announced, it takes several months before we actually see the financial effects of that. The data is lagging.
All right, Nancy Daoud, thank you.
Thanks, Nancy.